welcome back to The Financial Operator. I am Jen Pfizer, your host and owner of MKB CFO and Bookkeeping. And today I am really excited for this guest because we've already had a couple of conversations. So I know she's got some really impactful tips and stories for you. So I am here with Samantha Besnoff. Did I say that correctly?
You did.
Awesome. She is the owner of Your Financial Maven. She also has a podcast where I was a guest recently. So go listen to that one. But Samantha, welcome, first of all.
Thank you.
And we're just going to dive in. Give us a little bit of your backstory and tell us who you are.
Sure. Well, thank you, Jen. I'm so excited to be on your podcast now. I was excited to have you on mine. So now get to pay the favor and join you. So I have been in the accounting world for over 30 years. I actually graduated December of 94, a semester early from the University of Pittsburgh. So that'll be 31 years next week. Can't believe that.
Congratulations.
Thank you. Thank you. It's kind of wild. And I've been a CPA for almost 24 years. I have held a variety of accounting jobs in corporate, public, private, government, nonprofit. And 12 years ago, well, a little bit before 12 years ago, about 13, 14 years ago, I was working as an executive director of a nonprofit. And I was like, I really wanted to go out on my own. Part of it was for flexibility, right? You're on your own, you're your own business owner. You can make the rules as you go kind of a thing. But also I had young kids at the time and my oldest was heading into 5th, 6th grade. My youngest or middle school timeframe, my youngest was 3rd, 4th grade. And I just really needed to be home and have flexibility with them. So I actually went by my maiden and married name. I created Mittman Besnoff Agency and I started out with individual tax work. And it was really just kind of, hey, friends, family, anybody want work done? Anybody I knew? And then it started to grow and I started to take on businesses and helping businesses not only with their taxes, but also with their accounting and quarterly work and really cleaning up a lot of small businesses. They think, it's great. You could use QuickBooks, you can use Xero, but people don't necessarily want to use it or know how to use it. So I kind of stepped in. And in that time frame, about 6 years ago, I really started to focus more and more on small businesses, really started to grow financial education empowerment for young adults, for women, for small business owners, started the podcast process in 2022. I was actually a contest winner through iHeartRadio for one of the next up and coming women in podcasting. Did like an 8-week academy learning about podcasting. And then I started interviewing people about understanding their money and building on that. So I have, I guess now for the last year and a half, 2 years, really shifted to small businesses. I still do some individual tax work. I still do the individual tax work of my business clients because they have to do both business returns and individual. But there's a lot to do with all that. I live in Pennsylvania, born and raised, and lived on the eastern side of the state in the Philly area, lived in Pittsburgh area, and now I live in Lancaster. I've been here 30 years. We moved here right after college. My husband grew up here. I have 2 adult sons now, 24 and 21. And in my free time, I just love to spend time with my family, girlfriends, going out, traveling. I love the beach and, I crochet also. I'm not great at it. I learned by watching my grandmother. And then after she passed away about 9 years ago, I really was like, I have to just do it.
Carry it on.
Finding that self-care as a small business owner, it's huge. It's huge.
Yes. And that's very easy to not do.
Yes. And I'm also very involved in the community. I sit on several boards. I'm very, networking through chambers, things like that. So very busy as a small business owner.
Yeah.
Even with the own flexibility, I guess.
I know. I always laugh when we say things like, oh, I wanted to be a business owner for flexibility. And then it's like, yes, technically.
You're right. Technically, yes, you have the flexibility, but
there is some caveats to there.
There definitely is.
Okay. Well, so let's go back to, you did have a very long and kind of in-depth history and background prior to owning your own business. But what was that for you mentioned wanting to stay at home with your kids or being more flexible for them. Yeah. But how did you really decide to take that leap? Because I'm assuming you went from a job to no job.
So I actually, like I said, I was an executive director as a nonprofit. And at that time I was part-time, but I really wasn't. I mean, it's nonprofit and you throw your heart and soul into it. So I actually had some time. I was scheduled like 25 hours a week. I was supposed to work at the nonprofit. So I had actually started a little bit while I was still executive director, but then really had made the decision, and I left there and I spent the summer. So I left like in May or June of the year that I left. And I was like, all right, I did a few tax returns. I'm really going to start doing this. I actually am also an independent life insurance agent. My dad's been in the insurance business for almost 56 years. He's 82 and he's still rocking and rolling. And so I had that also because he wants me to take over the business. He's been wanting me to take over for 12 years now. So we're still figuring that one out. And so I just really spent that summer like taking a deep breath and just going, okay, I can do this. And then I just kind of threw myself into it, marketing more, getting people out there word of mouth that I'm doing this. And that first tax season, I maybe only had 20 clients. Not a bad tax season. But it was kind of like I just kind of threw myself into it and started to get the tax software, started getting prepped. So I think I took about 3 months off and realized as much as I want to be home with my kids 24/7, and I did that when they were born and I love them, but I needed work. I was driving husband crazy. I was driving myself crazy. So I took about 3 months to really just relax. And then I threw myself into it. And, it as they say, it takes 2 to 3 years to really get a small business going.
So that I feel like that's an important statement too, because a lot of people will give up, honestly, in those first 2 to 3 years.
They will. I agree. I actually I had taken on a client, just started a business and it wasn't going great because they just started, and I tried to convince them. And within 6 to 7 months, they're like, we're done. And I'm like, well, you got to give it time. And they just weren't, they were looking for that instant cash, that instant, $100,000, whatever. And didn't happen.
Aren't we all?
Yeah, we are.
I know. I think about that a lot too, though, because and the way that you kind of went into business too. And I'm a big proponent, like if you have a W-2 job that will support you starting your business and kind of
100%,
at least, that first 6 months kind of give you some cash coming in so that you can support your business, because your business is going to it's going to take all the cash that you have.
Yes,
right?
It is. Yes, it is. It's going to take some blood, sweat, and tears. And you're right. It will take your own money.
Yeah. And even I will give the example of this business that I bought MKB in June, and it was a cash flowing business. Like we had clients, we had things. And then I still, even though I had been getting paid by the business, those first 3 months, I was like, I need to not take a salary for those first 3 months and let the business like go. I don't know. Let it earn some money, put some money in savings, make sure that I have everything set up and in a place where I can make sure that there's longevity here and I'm not like stealing everything from the business too. Because if you go in and you're like, oh, I need to make $100,000 out of that first business, then out of, month one, we need to be able to pay myself on, whatever the salary is. You're taking money prematurely that you'll end up needing for your business.
100%. I mean, I was very blessed that, I had my money from my job. I, of course, saved some of it, used some of it. My husband, very blessed that he, very steady job and still had income coming in to do the things that we needed to do. And, I've always looked at my business, my income as the extra. And it's helped us. I mean, there's been some lean years and like it's helped with the extra, especially with the kids in college and the activities that they did. But yeah, I was very blessed to have that ability of coming off of a job. Even though I didn't work for 3 months, I still had some money that I had put away from that. So it was kind of using that to do this. And yeah, I would say the first few years there was extra money from the business, but it was really thrown back into the business. I would say probably not until year 3 or 4 did, I had more clients. I have learned over the years how to bill my clients the better way. I'm not going to say the correct way because people do different things, but I have learned over the years to take retainers, to get paid before I file the returns because I've been burned.
Yeah.
I've filed returns, done work, and then not gotten paid for months.
Mm-hmm.
And I'm like, I'm not doing that anymore.
I know these are probably some of the things that we kind of chatted about on our last interview. But there's a lot of things that you learn in business too. Mm-hmm. And a lot of them you have to learn firsthand. But that's what people, you and I are trying to help all those businesses not have to learn those things. But things like that, like taking retainers up front, getting paid for things in increments, even if it's going to be a really big project that's going to take a while, making sure that you're doing, billing them on a monthly basis or whatever it may be, so that you don't end up, losing a bunch of money on something that's never going to pay. So what are some things that you see businesses that you wish every business would know or put into place?
I think the first thing is to just know, especially when you're just starting out, unless you have a private equity firm or an investor, if you are starting out on your own, it's going to take some time. It's going to take your own money. You are not necessarily going to see a profit right away. Mm-hmm. You might be bringing in clients and bringing in money, but you still have those expenses that, to get it up and running. I think there's that. I think boundaries. It took me a long time to learn boundaries with my clients. Because yes, during tax season, I will work every day of the week. I'm not working 24/7, and I'm not necessarily taking or meeting clients on the weekends, but I would respond right away to emails, now text. I have a client portal that I use, and I've had to, over the years, say, I need boundaries because my clients expect me as soon as they email me to email them back. Mm-hmm. And I've had clients email me at 1 a.m. and, so boundaries, it's okay to set your boundaries and say, my work hours are here. There are going to be certain times of the year, maybe I'll adjust them. I will respond to you unless it's an absolute emergency, which even with emergencies, if it's like over the weekend and I have to deal with the IRS, they're not open until Monday. So right, you can't, you have to deal with that. The IRS is going to
set your boundaries for you.
Right, the IRS is going to set your boundaries. And I think the other thing is to understand your money. You have to really be paying attention to the money that's coming in and the money that's going out. And it's hard, right? You're trying to set prices. You're trying to figure out to be competitive. And you're not always going to get that right either. But you have to try and start somewhere. And then you have to evaluate your finances to see, am I pricing things right as you grow? Does this make sense? Am I underbilling? That took me a long time to realize I was underbilling. And I was afraid of losing the clients I had if I said I'm increasing my rates, but I have done that. And some of the clients have said, I can't afford it, I'm going elsewhere. And others have said, okay, because they see your value. And I think that's the other thing. As you know your stuff, whatever it is you're selling, it's a service, it's a product, you're your expert in that. And it's that whole imposter syndrome. You have to get past that and realize you're doing this for a reason. You have something to offer. And not apologize for your prices, not apologize for how you do things. I have, now that it's more virtual, I have a secure client portal. Everything has to go through there. We have to do it that way because I'm trying to protect people's data. I'm dealing with Social Security and addresses and I'm seeing W-2s and documents that pretty much it's you and your tax preparer, your CPA or accountant or whatever who can see it, or your investment broker. But I've learned not to apologize for why I do what I do and the way I do it, because I don't do it typically that like an accounting firm would do it or somebody else. I do what works for me because it's my business.
Yeah. And I think that's important too, because your pricing comment here, I always phrase it like you can work your ass off for less money, or you can price it correctly and work the amount of hours that you want to work and put in, it's always the one that they're paying the least amount that are going to run you ragged. So knowing, and obviously it depends on the type of industry that you're in.
Of course.
a lot of if a client is going or a customer is going to show you upfront that they're going to be a pain or that they're going to haggle on price upfront, they're going to haggle on everything.
100%.
So being willing 100%. To say no.
Well, and you bring up a point there too, and I had to learn this too. It's okay to fire your clients.
Mm-hmm.
It's okay because yes, I fired a few clients and panicked like, oh, how do I replace them? Right. Because that is income loss to you, but it just works out. Like,
yeah, I have had that happen. Like right? When I get rid of problem clients will come in all the years, right? Like with every business I've been in, once you clear, it's like amazing. It's like, oh, the universe like rewards you for that in a way. And it might not be immediate and it might feel stressful for a minute, right?
And a little scary.
But it frees up more of your time to be able to go out and get the client that you want. And that is going to be the right fit for you.
Yeah. And it's hard. I mean, I hated having to do it the first time I did it, but I knew that if I didn't get rid of a couple of the clients that I had to get rid of, it would bring me down also. Mm-hmm. Right. I mean, for me, it's also a moral and an ethical thing. If I have clients that come to me and they are doing some shady business, I won't work with them. Yeah. Because that's just not who I am. And I had a client come to me. Everything was great. They had been with another accounting firm, wanted to use, pay a little less, but use somebody that was a little more personable. And I think the first 2 years, things were pretty good. And I started to see some cracks in the second year and kind of wondered why they left the accounting firm that they had and came to me. And by year 3, I could see why. Mm-hmm. And there were just certain things starting to be missing and things weren't getting cleaned up when I asked, like, we need to do this. And I finally was like, I can't anymore because I don't want to put my CPA license on the line. I've worked very hard. It took a long time for me to get that license. It took about 7 years from when I graduated to when I passed the final part. When I took the CPA exam at the time, it was 4 parts, all by hand, and you had to get a 75 or higher to pass. That was just like the breaking point. It didn't mean you were good or bad. And the one part I kept getting like 73 and 74s. And it was just,
oh my gosh, that's like,
it was so frustrating. And it wasn't that I didn't know the information. It literally was maybe one part of a problem or 1 or 2 questions. I was actually 8.5 months pregnant when I sat for it the final time. I always thank my son. It was him. And I passed it. Yes. So I worked really hard on that. And of course I go every two years, I have to do continuing education constantly, 80 hours of continuing education. I've done that for the last 30 years, even before the CPA exam. Every year, every 2 years, it's 80 hours. So I'm constantly working for this. And for me personally, I'm not going to take that client that has some ethical or moral boundary that they want me to cross. Mm-hmm. And you as a small business owner, if it doesn't feel right in your gut, listen to it. Mm-hmm. It's probably right.
Mm-hmm. I use this, and when I'm talking to my clients too, because they're usually not CPAs, right?
Yeah, it's all good.
So I feel like finding the right CPA, the right person that's going to do your taxes, it's such an important relationship 100%. Because there's all kinds of personality types, and there's all kinds of business owners, and there's all kinds of CPAs, right? And so making sure you're finding that match, and not both sides. Not everything is created equal, right? And depending 100%. On what you need in your business, there may be nothing wrong with the CPA that you have, but there may be one that fits you better.
Right.
And the same for you, right? Like finding the clients that are in your expertise and you can help the most, it works both ways.
It really does. I mean, it's one of those things. I always do a prospective client call. Mm-hmm. To just have that conversation, and I explain how I work things. I'm very transparent. I keep my clients in the loop about everything. Not everybody likes that. They just want somebody to do the work and leave them alone. Yeah, but that doesn't, again, jive with me. And I will always tell them at the end of the call, you're more than welcome to say you want to move forward, but it's also fine if you decide to interview and talk to other people. Mm-hmm. In the nonprofit world, in the business world, it's typical to get 2 or 3 bids before you do something, right? Yeah. 2 or 3 bids before you replace the windows on the building, kind of a thing. Same thing when you're doing your product or service. It's okay to ask around.
Yeah. Absolutely.
And find that fit.
As much of a personality fit as it is like
100%
business fit, right?
100%.
Okay,
And cost is important too, but
exactly.
the fit is important too.
So we'll be releasing this episode. I mean, we're right now kind of in prime tax planning time, but
Yes,
what are you seeing? Is there anything new this year or things?
Sure.
I know that's
where do I
question.
start? Yeah, no. There is. There was a new tax law passed in July of 2025. Mm-hmm. One big beautiful bill. We're calling it OB3 because it's just easier to say.
Now I'm going to feel like I'm in the know when I say
that.
Yes,
when you're in the know, there is a lot for individuals and small business owners. There's still time. We're second week of December right now when we're recording this. 3 weeks left. I got about 3 weeks left. There's still some planning that can be done for 25, but a lot of it is for the next year. The biggest areas it talks about Social Security tips and overtime. The bill labeled it as no tax on Social Security tips and overtime. And I always say it's a little bit of a misnomer because it's really going to be a deduction or a credit on your tax return. So what that means is, if you have Social Security income, you're still having taxes taken out and you still have to report it. If you have tips, you have to report your tips and you have to have tax on that. And the same with overtime. Taxes will still be taken out. You have to record or report these incomes in order to get those deductions. And there's all kinds of little regulations and all. But it is really, truly a deduction. You still have to report your income and there's still going to be tax on it. So that's a little bit of a misnomer, but the law allows you to get this deduction. For Social Security, it's 65 and over. So not everybody's getting that either. So that's another important thing. Something that actually is just in the news this week are those Trump IRA accounts. I don't know if people have heard about them. They are really a retirement account set up for any child that is born between 2025 and 2028. There's a form you're going to have to fill out to elect to set up these accounts. The government is supposed to fund it for $1,000, and then you can start contributing to them. I think in July of 26, like a regular Roth IRA or a traditional IRA. And then there are rules and regulations on how you can take the money out, who can make contributions. That kind of stuff is coming down the line, something for planning purposes as well. I don't know how they're going to do the makeup for 2025 because the way the law was written, it was supposed to start in 25. So I don't know if there's going to be any kind of extra deduction or any kind of credit towards that. For small businesses,
it's essentially going to replace their Social Security.
It's possible. It's possible. I mean, it's a retirement account. I mean, we don't know where Social Security will be in 5, 10, 15, 20 years. Right. So it's possible. And it is possible that as this retirement account grows and shifts, because again, with tax laws, that's what it is right now. But if another tax law comes down the line, it could change the structure of them. That's what happened with the Roth IRAs. They set them up a particular way. And then, of course, over the years, they've made some adjustments to it. So yes, it could very well be for those children born between 25 and 28. It's really to get them started, right? Help families get started with savings. It's not a bad idea. Not everybody's going to elect to do it, and that's their choice. Small businesses, there's some things to pay attention to. Some of the things were made permanent under this tax law. And when I say permanent, it's only because this tax law made it permanent. That's something else as a small business owner to be aware of, and also as an individual. Tax law changes can change those permanent deductions or right things. One of the things
permanent in quotation marks, right?
Permanent in quotation marks. So one of the things they did make permanent for small business owners is the 20% qualified business deduction. Most businesses potentially could get 20% off of their income as a deduction on their return. That was made permanent. There still is any specialized service businesses like accounting and lawyers. I don't know why they decided those businesses don't either get the full amount of the deduction or don't get the deduction at all. And then there were some things with businesses with relation to interest and some other things related to 1099 compliance work. So You hire an independent contractor, you hire a vendor that is a sole proprietor or partner, and you've paid them. So in 2025, if you've paid them $600 or more, you might have to issue a 1099 NEC or miscellaneous form. Okay. That goes up to $2,000 in 2026.
Oh, okay.
Yeah. And also third-party vendors like PayPal, Cash App, whatever, may start sending out 1099Ks for, if you've paid those contractors or vendors through third party, and I believe it was pretty much credit card, not cash or not your checking account. They're supposed to issue it, but that keeps changing the threshold. So you just have to be aware for that. But there is a lot going on in the tax world, and we don't know if tax season starts at the end of January, beginning of February. We're still waiting to hear. So a little frustrating.
I was actually talking to a client's CPA yesterday, and she was like, generally they close the portal from, I don't know, I think she said October, November, somewhere in there. And she was like, we don't know what's happening this year, so we don't even know when we're going to be able to file taxes.
Well, they're closing. We just got word they're closing e-filing right now, December 26th, which means if you need to file a return still or amended return, you won't be able to do it starting December 26th until they open up for tax season. And they do that because they have to update their system, right? Like they need downtime. That doesn't mean that your sales tax, your payroll tax, your 1099 work gets halted. Those are things that still continue.
Right.
We're talking business tax returns, individual tax returns. There's some adjustment. But then, yes, if you have to do 1099 work, payroll work, everything is supposed to be done by the end of January, unless they give an extension. So, yeah.
And she's totally spitballing yesterday when we were talking. She was like, potentially, because they generally shut down, I think she said, for 3 months to get everything kind of updated. And that's running really close to the timeline for partnership returns.
Yeah, they're due March 15th typically. And so I saw something that said they might not open tax season until February 15th. Well, that only gives preparers 4 weeks to do business returns.
Yeah.
So I don't know what's going to be either, but for businesses to be aware, for individuals to be aware that there is potentially going to be some adjustment with tax season. And the biggest thing I always tell everybody is, if you are a business owner, if you are a partner or a shareholder in a business that maybe you don't run, but you're part of that, you cannot file your individual return until you receive that documentation, the K-1s for partnerships and S-corps, anything from investments, for dividends, for interest. When IRS usually opens up and they say, time everybody can e-file, end of January, that's typically if you're really just a W-2 earner. If all you have is a W-2 and maybe an interest statement, maybe a dividend statement. If you have Social Security, if you have all that stuff, I would wait till mid-February to file. I know that's hard. I want my refund. You should really wait before you file, because I've had clients had to amend returns because, I didn't know I was getting this. Yeah.
Yeah.
always
and none of that has to be final, right? It doesn't even have to be sent out until January 31st. So
correct.
If you're filing even a W-2, you may not have all the W-2s.
Payroll, interest, dividends, 1099 NEC and miscellaneous forms are technically not due to go out until the end of January. That's by the tax law. Investment statements, if you've sold stock, if you have that, typically not till February. And then investment brokers, sometimes they'll send it out and realize there's a mistake and they'll issue another one as the corrected. So I always tell my clients, I will start doing work in January and February, especially for business clients, but I will not start filing until after February 15th.
Yeah.
I won't.
Yeah.
Because I have to make sure everything's there.
Yeah. And I think that March 15th date, this is why too, right? Because you need to have your partnerships and all of that filed before you can, it's kind of the 100%. Built-in system for the IRS to make sure that you do that first. But
100%.
Do you recommend filing extensions for business clients? If they're not, by March 1st, if they don't have their stuff in, go ahead and file an extension. Yeah,
I've had to put, and that's, talk about boundaries and deadlines. I've had to put deadlines on to my clients and say, for businesses, if I don't have your stuff by March 1st, and it's going to take me a while, I'll give them a 5-day leeway and then I'll say it. Then we're going to have a conversation around March 5th, March 6th, and we're probably going to have to extend, which means we're going to probably have to extend your individual returns. Now, My clients that I work with on a monthly basis, most of them, I have all the stuff all year round. I am pretty good at that. But I do have some clients that I just do their individual return and they're waiting on business returns. And so I say to them, you have to let me know. If it's going on extension, then I'm going to have to extend you because I can't do the work without that. And I do the same thing for individual clients. By the end of March, if I don't have your stuff, I can't guarantee I'm going to file it on time and it'll have to be extended.
I see that a lot from the client side. They're like, oh, I got it to her on, March 5th. She has 10 days. I'm like, no.
And I think that's where people don't understand that depending on who you're working with, my process is I gather all the data or most of the data. If I don't have all the data, I can still get started. I have an organizer. That's the other thing. If you are hiring a tax preparer or a CPA, engagement letters and tax organizers, in my view and opinion, are a must. You want to know who you're working with and you want to make sure you have everything. And they're required to have a preparer's tax ID number that goes on your return as well. So that's important to know. But my process is I gather your data. I'll do the work. I'll set it aside because it's me. I don't have anybody else who works with me. And I'll come back to it like a day or two later to review it. But then I send it to the client to review. Now, 9 times out of 10, I can't read it, understand it, but I still want them to have eyes on it because people have caught address issues. People have caught, which happens, right?
Yeah.
The addresses could be missed. I missed something with an income item that maybe they got that they didn't tell me. So my process could take anywhere from 1 to 3 weeks, depending on the interaction. So yeah.
Tell me a little bit about, just because I don't feel like this is common knowledge, what information you actually need in order to file taxes.
Sure. So the biggest thing is name, address, social security number. And the thing about your name is it has to match exactly what is on your social security card. And I will tell you, the IRS will reject your return instantly if the social security doesn't either match the name, or that's also an indicator of potentially someone filed under your name where there could be fraud. So like that, there's the potential for that. You have to make sure your social security card matches what you put on your return. And I will tell you, they will be looking at that even more. A lot of these new changes with the tax law for these deductions and credits, they won't give it to you unless you have a social security number and it matches your name. Very, very important to have that address, any and all income items. You worked and you have a W-2 job, your W-2, any bank statements that they send you. 1099s are typically the statements, and they're either going to be retirement, interest, dividends, sale of stock, social security. Also, the biggest thing every year that I have to get from clients is if you have an HSA, I need the tax documents for the HSA. I have to put the reconciliation of that on the return. It might be reported on your W-2, but I still need the tax returns for that. And then I don't need like every receipt, necessarily every letter for like charitable contributions, things like that. But even if it's just a list, a lot of what I do is, at the end of the day, the returns are the responsibility of the taxpayer. Yes, I do the work. Yes, I could be liable for something, but the liability and the responsibility lies with the taxpayer. So if you forget to give me something, or something gets missed in the whole process, and the IRS sends you a notice, they're sending it to you. Right. And the other thing to note with that too is, for married filing jointly, you are considered individual taxpayers. You're just joining together on the return. So it's important to know that, to have all that information for the return. And the other thing that everybody should do is get an irs.gov account, go on to irs.gov, get your account, because then you can see prior returns. Do you owe anything? What credits you've gotten? Here in the state of Pennsylvania, we use MyPath PA. You can set up your Pennsylvania account, and also local. In Pennsylvania, we pay local taxes, earned income taxes. You can set it up with your local taxing authority. But those are really good things to have, because with that, I try to require all my clients to get an ID PIN, an identity PIN, through the IRS for filing. It protects your return. It's just another layer of protection. So getting that ID PIN, you have to get it every year. So if you have your IRS account, it's easy to get. They don't normally start those until January, February. I don't know with this year either. Like, direct files going away. There's things that are going away that people were used to having.
What about business clients? How do business clients get if they're doing it themselves? How do they get everything in order for you?
Right. So the biggest thing is if you're using QuickBooks or Xero accounting, an accounting software, even if you're using Excel, the biggest thing you need to give to the CPA, the tax preparer, is it's called profit and loss statement. But even if you don't have the statement, what is your total gross income for the year? So what did you bring in? And then all your expenses, an itemized list of all the expenses, bank fees, credit card fees, insurance that you pay, if there's any vehicle, auto, retirement, benefits, payroll. You can even just send the Excel spreadsheets if that's what you've been working on. QuickBooks and Xero do a nice profit and loss statement and a balance sheet. They have both reports. The balance sheet is good to have for the businesses as well, because in some cases, partnerships and S corporations, we have to report your assets, your liabilities. And so both of those reports are really good for businesses to gather. The other thing is a list of your vendors and your independent contractors so that we can make sure the right things are being done with that for 1099 compliance. Okay. If you haven't done that. Anything with sales tax, like if you have a summary of what you paid for sales tax, and also your payroll reports can help. But the biggest thing is your income and your expenses.
Okay. And so I always recommend to clients, even if I'm not working with them, I'm like, make sure that your banks are reconciled through the end of the year. That way, 100%. It's like the easiest way to catch things, right? Like if your bank balance doesn't match at the end of the year, then something's off.
Something's off.
Yeah.
Yeah, 100%. I mean, people, when I started, everything's by hand or a little bit with the computer. So reconciling your bank account would be taking the bank statement that you got in the mail, the physical paper, and then like checking to see what cleared. And now it's all done electronically, especially if you have an accounting software. It can be done electronically, but you still have to make sure it's reconciled. Your data coming in. I've seen clients where they brought the bank feed into the accounting software, but they didn't add it to the register. And so it's sitting, there could be 300 transactions sitting in this bank feed and they're going, I don't know why my income doesn't look right. Well, that's because we didn't add this stuff into the register.
Yes.
And now we've got to,
those things.
We have to categorize them. And then we reconcile them because you're right. I mean, there could be a duplicate of a deposit that was put in. There could be a check that you wrote in February that now it's November and it still didn't clear. Why didn't it clear? Right? You're thinking that's an expense, but it never cleared. Did it get lost in the mail? Did they just get the check and forget to cash it? Reconciling your books, your bank account, your credit card statements, your investment statements for businesses, your money market accounts, 100%,
Yeah. This is where I find a lot of, you probably see this a lot too, right? Where there is some other system that they're using for their invoicing and that gets connected to QuickBooks, but then the bank feeds get connected to QuickBooks. And a lot of times we'll start seeing like it can get out of control very quickly.
Yes. And it's not to say that they're doing it wrong. Right. It's not to say you're doing it wrong. What it is if you're connecting that invoicing software to QuickBooks, you've got to do the transaction from that batch. And hopefully then it will match what is on the bank feed. And where I have the issues, and I'm sure you see this too, is if somebody pays you by credit card and the money so everybody has to remember, let's say I sell you something for $100 and you pay it by credit card. Well, the $100 I still record as that's our gross income. But now I have to take out the sales tax and I have to take out the bank fee for using of the credit card. And that net number is what you're going to see in the bank feed because the bank is only going to deposit what is physically sent to you.
Yes.
So that's the biggest thing. The bank feed will show what is physically deposited or expensed out of your account. But you can still show the invoices coming in as a gross amount and then add those fees. So yes, it's like a two-step process. It's not this like, connecting. And there's the other thing too, I'm sure you come across is credit cards. The businesses that use credit cards have to itemize everything they use the credit card for. Because what I have seen a lot, especially small businesses, is their expense is credit card expense when they go to pay the bill, but they're not itemizing the fuel, the advertising,
the credit card has to be its own bank account, basically.
Correct. And that's why a lot of times you should connect it to your software if you're using accounting software, because then each individual transaction comes through. Those are your expenses. When you go to pay the bill, you're just paying it out of the checking account. That doesn't even hit your profit and loss, income and expenses.
Well, and that can, like, let's say you carry a balance on your credit card, right? If you're only expensing the actual credit card payment, 100%. You're potentially paying taxes on profit that didn't exist.
100%. Right? You're 100%. And you're missing out on expenses that you could utilize to reduce that income, because this is the other thing small businesses have to understand. If you are a sole proprietor or in a partnership, what happens is the net profit from that business, and I know there could be net losses, but I'm going to talk net profit, that is taxed at self-employment and earned income. And you want to maximize your expenses. So if you are not itemizing your credit card, you're not maximizing your deductions potentially for your business. And I always have to tell people that if you are a sole proprietor, even if you're an LLC is a legal structure, not a tax structure, sole proprietor or a partnership, that's self-employment. And I get, I'm double taxed. Well, you're getting self-employment tax, which is Social Security and Medicare, and then you have to pay earned income tax on the money you earned. So
which, surprise, if you're working for a company, they're paying it for you.
So. Well, and that's what I try to tell them. I say, if you work for yourself, you are both employer and employee. And I get it. I've been on my own for 12 years. I am a sole proprietor. I have paid so much in self-employment tax. I get it. Estimated taxes. I get it. But that's part of being your own business owner. That's just part of doing business.
Yep, absolutely. Okay, so if somebody wants to work with you, do you have like a specific niche of small businesses that you like, or just vibes? Tell me how you decide if you want to work with somebody, or what's
so I do try to stay away from like manufacturing.
Okay.
I do have a few clients that are small manufacturing. They make products and all, but I try to stay away from that because of inventory. Like that was the one area of accounting that it just never clicked for me.
Nobody
I can do it. I just don't like inventory. But I'll do a lot of service businesses. I work with some art galleries. I work with some retail. I've worked with therapists. I've worked with people with health industry. I've done lawyers. So it's really, it depends on what that person needs and how comfortable they are, with what I do. The process really is set up an appointment to meet with me so we can talk about what it is you need. And then if we move forward, then it's getting the engagement letter. Most of my small businesses are monthly retainer. So I get paid a monthly retainer. And what that means is I'll help you throughout the month if you want with your transactions. I'll do sales tax stuff. I will help with quarterly estimates, quarterly reporting. And then, of course, a lot of the year-end stuff with 1099s and sales tax and getting your books cleaned and in order for tax purposes. And then if you want, I can also do your taxes. So,
okay. All right. Well, if somebody wanted to start with you, how should they reach out? Where can they find you?
Sure. You can find me on my website at yourfinancialmaven.com. And there's like a little tab for prospective clients. So you just click on that and follow read the little info and then click on that and make an appointment. And then the appointments, I think I have them set for either 30 or 45 minutes. It all depends on what there is. And then there is a fee to sit down with me for that 45 minutes, because I have found over the years, and this goes back to the don't leave money on the table and don't apologize for why you charge what you charge. Because I find that in those conversations, I'm comfortable giving some advice, right? I might not take you on as a business owner, but if you have a question and I'm able to answer it, I'm going to go ahead and answer it. So I feel like it's a small fee for that 45 minutes. And then if it's a fit, then we move forward with the engagement letter and I get them set up. I'm 99% virtual. I do have some local clients here in Lancaster that I will go meet. And then some of my business clients locally, I'll go in person, and everything is handled through through our client portal, through virtual meeting, phone, email. And that's really, check out my website. And I'm also doing just 1099 tax compliance. So if there are small businesses out there right now that just want their 1099 NEC and miscellaneous work done. I'm trying to say, like, get it done now. Like, don't wait until January 29th because I won't take you at that point. Right. But I will do just that work. I've done just some sales tax work as well.
Okay.
For clients. So I don't just do the monthly, I will do some consulting for that. So
awesome. All right. Well, thank you, Samantha, for being on.
Thank
it was
you.
lovely talking to you as always.
Yeah, you too. You too. This was great to do this again. I love it.
I know. All right. So everyone go find Samantha, go to her website, sign up for a consultation call if you would like to work with her. And otherwise, I am going to talk to you later. I'm sure maybe refer some clients. We should talk.
I would love that. Yes, we definitely should talk. And just so you know, too, on my website, there's a thing that says links also. That gives you all the different areas of what I do between the podcast and the work I do for
definitely go listen
clients.
to our podcast.
So, yes,
absolutely.
Yes. And it's also called Your Financial Maven. So
awesome. All right. Well, thank you.
Thanks,
and
Jen.
Have a great Christmas season. It'll be after Christmas, maybe when the people
yes.
are
It's all good. It's the holiday season. Everybody's busy.
All right.
So
Thanks.
Thank you.